Pull up ASAP. Pull up ASAP. I'm trying mic check, mic check. Mic check, mic check. Pull up ASAP. Pull up ASAP. All right, there you go. All right, so hello guys. I hope you guys are doing good. So it's like here. Let me show my face. Boom. That's me right there. So I'm gonna be sitting down here. All right. All right, so I'm doing a market review. I'm going to be looking at the London session today. I was not awake at the time because I slept late. I was kind of busy with something the previous day, okay? I mean, yesterday night. So I actually slept at 4 a.m. South African time. So I was like kind of really, really busy with some other business stuff. But here I am. And yeah, so let's look at gold. I think it was beautiful. On my left here, I have the daily chart. And then here I have the 1 minute chart. Okay, so we're going to be looking at the overnight market, and then we're going to be looking at the Asian session, London session. That's what I'll be focusing on: Asian, London, and the overnight market. So basically, so yeah, I want us to focus on this daily candle. Okay, I know that it's like already happened. It's like we're back testing something that's already happened, but there are some things that I want to point out, hints that are always in there. The market is always tipping its hand, and you need to be able to have the eye for it, okay, so that you're gonna be a profitable trader. Okay, minimize the number of trades you take per day. 2 is a good number for me. I find profitability with that. I found profitability with that. 2 trades a day. All right, so you're done. You're trading maybe London session, that's it. Or you're trading London and New York. But when you're still starting out, focus on one session, master it, fall in love with it, and then always take trades during that session and nothing more. You backtest the other one or you demo trade the other session. All right, until you have money. Stick to one thing. Stop going from strategy to strategy. All right, so you're gonna like you're gonna not like you're gonna end up not knowing exactly what's preventing you from reaching your goal of being a profitable professional trader. You want to um you want to have like things. You want to minimize the number of rounds that could be done, you understand? Because let's say you trade the London, New York AM and New York PM session. It's gonna take a long time for you to know which one which one you're most comfortable trading. Which like it might be it might be because of small things like what time do you wake up? Okay, during the day, you personally, which hours of the day are you most active, you know, on? So let's say some people are very, like drowsy for long hours. Let's say you wake up at 6 a.m., maybe you're drowsy until 11. Maybe the whole London open session, you're fucking drowsy and you lost money because not because you're a bad trader, but because that's like you. That's like the kind of person that you are. Maybe you are a person that, hates sleeping like me. Maybe your Asian session will be the best because you're mostly active at night. So those are the things you need to stick to one session so that you master that and then you make money from that and then you can venture into the other. But that's not what I'm here today. I'm just giving you, like, things that you can, focus on so that you can grow. So I don't know how to open because I'm trying to check on my phone. trying to scan my face. It can't because I have a mask on. So I'm trying to see if I have anything on the chat box here, on the chat window. All right, so I'm going to be constantly checking my phone, right, for that, because I don't have the chat window open. Maybe I can open it on my OBS, I don't know. But yeah, I'm not going to be here for long. Let's do the market review. So we're going to be looking at what happened after we swept previous day's low. So this is previous day's low, and this is when we purged it, okay? We're going to study the market below sell side. What happened here? So we went lower, and then we were quick to retrace to break above this high, and then we retrace back inside this range high and range low, and then below midpoint, which is the equilibrium, or actually we are at equilibrium. We found what? A fair value gap, and then we pushed higher after breaking structure day. We went all the way up, breaking above this swing high right there, and then we started consolidating, right? What time did we purge? At what time did we price purge previous day's low, right? It was around this is during the Asian session, right? So this becomes what? High resistance liquidity run, because we have a bullish market structure shift after this rate, right? We continue to go all the way up, creating another market structure shift to the upside because we're breaking the highs now, right? So when the market, or when London open kill zone begins, do you then expect price to run this low if on a daily chart you're already bullish? No, this is a high resistance liquidity run. The same way this low here was a high resistance liquidity run. It is like a protected low in a way. Okay, that's how you can look at it. Let me just do this here. There you go. All right, so with that being said, all right, so you consolidate here, and then you see this is a manipulation leg distribution to the upside, taking out this high. Now this again is another bullish market structure shift, looking at how we displaced above it, right? Remember, we are bullish now, and we are targeting previous day's high, because we've cleared now what previous day's low. So this is our target on the daily chart. So you haven't met this target yet, okay? We haven't met this target yet. So let me just do this and sync this in layout so that you'll be able to see, okay, the green line above pricing. So this is our target, right? This is our draw on liquidity, okay? So for as long as you're still inside the sessions, we are trading with this idea in mind, all right? Because it's close by. So we can reach it during these sessions. It's just here. We can use that on a daily chart, all right? So you want to be in line with the bullish bias, right? As a trader, you want to be in line with the trend. The retail guys call it. I'm also retail, by the way, but the retail language. I don't speak the retail. I don't trade the retail knowledge. Yes, I'm also retail because I'm just a trader like any other guy on YouTube or on Instagram. I'm not the interbank. I'm not one of the interbank people, right? But I don't use the knowledge of the public. I use the knowledge of the interbanks, all right? So I trade with that in mind, all right? So I want to be in alignment with the high time frame order flow, right? So when London Open begins, okay, what do we have on the left? What can I use from my left? And where do I expect price to gravitate to? All right, so you're looking at this low here and looking at price pushing and closing, and breaking above the highs here. Do I expect price to come back and take out this low if price were to retrace? No. but I'm looking at this as my original consolidation. Yes, price can retrace all the way down to these lows here because these are relative equal lows, and I'm looking at this as a market maker, buy side of the curve, and this as a okay, this is like before this happens, right? I'm watching this accumulation here. All right, smart money is engineering liquidity here. We might come for these lows because people are going to believe that this is an area of resistance, the retail guys. So that's what we trade, that's what we attack, and that's what we target as interbank or smart money traders. So original consolidation, it goes all the way up, and then there was some sort of accumulation first stage, second stage, and then there was a smart money reversal break. This is a bearish market structure shift right there. Fair value gap, low risk sell, boom, and then you target these relative equal lows. Second stage this is a first stage distribution. This Terra Soup entry was the second stage distribution, targeting original consolidation lows. Now we are inside the London open kill zone. So what are the characteristics of the London open kill zone? It whips both sides, sell side and buy side. Okay, so here we opened at 2 o'clock rally. This was the second stage accumulation. Smart money reversal up here, low risk sell. So now we have buy side from this high. Now we are targeting what? Sell side below here. We are still inside the London open because it closes here. This is a London open kill zone. This is 5. It begins at 2 to 5, right? Excuse me. So we have sell side here. The buy side has been perched up here. Market maker sell model targets original consolidation lows here. And then what happens? Because you don't expect price to come below this low. Why? What happened when after price took out this sell side liquidity here? Bullish market structure shift, displacement. This is a high resistance liquidity run because the market structure shifted after this rate. This is a market structure shift. The same thing that happened right there. This is high resistance liquidity run because market structure shifted after this rate. Sell side rate here, market structure shift. This is where you put your stop loss if you were to take a buy here. Boom, because your stop loss is hidden here. So the same way here, we targeted the original consolidation lows, and then after that there was a bullish. Now look, I have a note for you here. The buy program was in after the previous day's low was pushed, right? The sentiment changes to bullish again inside the silver bullet hour. We are now inside the silver bullet hour. This is 3 to 4. But what triggers this bullish market structure shift is the macro at 250 to 3. The macros are very important. All right, so this is like a beautiful example of a market maker model, the macros and institutional order flow. All right, I'm teaching you institutional order flow, I'm teaching you the macros, I'm teaching you high resistance liquidity run, I'm teaching you everything, the ICT silver bullet. I'm teaching you, like, I'm just teaching you sentiment, the narrative. I'm teaching you everything in this lecture. You must take down a note-taking instrument and write these things down. Write these things down. Have an eye for these things, all right? This is how you're gonna get rich, all right? This is how we are going to get rich, 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 rich. I'm talking about millions and millions of quid, not even dollars, bro. This knowledge. I'm teaching gold. Gold is nice. Gold is just a fucking it's so nice. Remember, you have a draw which is the previous day's high. All right. You're in a ranging market. I'm bullish because on this day, we took out previous day's low, which was what, Friday's low, and we closed where? Inside the range. So the following day, this daily high becomes my draw. It's even better if I open and sweep the low here. This is not candle range theory, guys. This is order flow, all right? So I'm bullish and I'm using this high as a draw on liquidity. This is my draw. So I'm bullish because of that. This happening confirms my bias. I am more comfortable being bullish, because now sell side has been swept. It means I'm going to see speed in the direction of my draw. And that confirms my bias. And that's how I'm able to spot high resistance liquidity run, high resistance liquidity run, high resistance liquidity run. That means if I'm going to take buy positions close to those areas, I know where to put my stop loss. If I'm on side and I'm reading everything, correct, I'm never going to hit my stop loss. The silver bullet hour during the 250 to 310 macro, a bullish excuse me, a bullish program is back in, is triggered back in again after we've completed the market maker sell model, original consolidation lows. Bullish market structure shift above this swing high. I'm watching the breaker. The swing high is right there. This is a swing high on 30 seconds, but let's not say this is a swing high on 1 minute, okay? Here's the swing high. Once we push with speed above this breakout, we are having two fair value gaps breaking above this swing high here. I expect this to be what? A breakaway gap. If price were to trade inside this fair value gap, I want to see an institutional order flow entry draw, which is what happened right there. What is an institutional order flow entry draw? Is when price enters the fair value gap partially. So institutional order flow entry draw. Institutional order flow entry draw right there. I'm teaching you institutional order flow entry draw. I'm teaching you the macros. I'm teaching you sentiment. I'm teaching you high resistance liquidity run in one video. So that's why I said, no, let me just record a video because I'm covering a lot of things on this specific video. And that's exactly what happened here. If you bought this fair value gap, which it qualifies to be an ICT silver bullet. We are inside the silver bullet hour 3 to 4. There is a change in state of delivery. Once we break above this high and this breaker, you're expecting higher prices. Now a bullish market, you don't expect price to go below this low because this is a high resistance liquidity run. It means you can even buy the lows. Once you sweep these lows here, you can just buy, put your stop loss below here, or you can wait for confirmation. And once you see this, you want to buy this fair value gap, the upper one. Your stop loss should be below the CE of this fair value gap. If you are on side, it won't touch you, it won't get you, and it delivered beautifully to the upside. You have these relative equal highs, and you have that draw, which is previous day's high. But the silver bullet hour ended right there. It continued to run. You can leave runners after you sweep this high because this can happen. We are trading on an election day. You don't expect price to go all the way up to previous day's high, but yes, we did end up taking it out right there. Yeah, but yes, price had to retrace and do all of that before it continued and went all the way up. Now I'm not gonna go to and analyze the New York session, which was also pretty obvious after taking out the previous day's high. This is a bearish market structure shift. This is a fair value gap in this at premium of this range, the retracement, that's a fair value gap. Where are the relative equal lows? This low and that low, that's a draw, delivered, boom, done. 2 trades a day. You can take 3 if you're on site on this sell and buy there, then leave this, come back during New York. You can also, once you see that this is a bullish market structure shift here, this is just a retracement to that fair value gap right there. You can buy that or wait for a bullish breakout above a bullish market structure shift here at the right time. You can ride it going all the way up, and after taking a previous day's high, once you see this, you can also short that and go to sell side. Now you have how many trades? You have 4. 1, 2, 3, and then this is the 4th one. You're done. You can do that. It wasn't easy. New York was easy. This was a bit tricky for some people because once you see this drop, you would think, okay, it's coming for this low here. No, buddy. Oh, it's coming for this low here. Why did price? Maybe you're selling and you don't understand why price failed to take out this low. You're like, why? Why price failed? I'm just told you why. I just told you why. It was not a coincidence, buddy. You did not read it right. Yes, sometimes I also don't read it right. You know, that's why I take losses too. I'm human. But I know why. I always know why. That's what I'm grateful for. I almost every time when I take a loss, I know why. Like 90%, 95% of the time. I can even say 97% of the time. I know why. So today was beautiful, even though it was an election day. You know, I wasn't expecting price to be this clean, but it was just beautiful. It delivered. But yes, obviously, I was gonna trade either this revenue gap or this one. Or if I'm that convinced, I was gonna go long below these relative equal lows right there. Stop loss below here. Once I see speed, add a position here, add a position there, and then leave it. Start offloading here, here, and leave runners. Maybe do a little standard deviation here. Maybe look at -1 standard deviation and maybe -2.5 and -2. Take something off right there. This is -1 standard deviation, right? Boom. Take something off. -1.5. 1.5 is where, let's check 1.5, -1.5. I don't have it. Let's put -1.5 here. There you go. -1.5 delivered beautifully. So take 80% off at -1.5. Like that. Boom. And that's where it turned. Boom. And be done for the morning session. If my runners are taken out on retracement below here, because my stop loss will then be here, because I know once we break below this low, that's a bearish market structure shift. It means I'm now should expect a bigger retracement. Put my stop loss below there. If it takes out my runners on retracement somewhere here, I'm good. I'm cool with that. I'm cool. It's above this high. It means I took majority of my trades above this high, which is like a low-hanging fruit for me if I'm in a bullish trend. I know this is a low-hanging fruit, but if I'm bullish on a daily chart, this is my low-hanging fruit. This was beautiful. I hope this was very insightful to you guys. I hope you guys learned a thing or two. Covered a lot of things on this one. If you got questions, you can drop them and I will answer them on the comments section. All right.